So guys, welcome to another market recap of the S&P 500. Today we're looking at the SPY for Wednesday, February 24th. Just taking a look at the SPY, we made a very bullish candle. It happened to what ended up happening yesterday I said we ended up kind of neutral, and kind of today would determine where we would go from here, depending on where it opened. And it actually managed to open right above our support line. Um, so overnight, it actually went down from about the 387.47 level all the way down to 386.30. So this was telling me that the during the after hours, they were pretty much setting us up to run a test of this level, and even possibly just break through and continue the leg down. Um, so what ended up happening is we ended up opening, and throughout in the morning we saw a dip to 385. It found a bottom and it actually reversed. And as soon as it pretty much reversed above this, that would have been a good signal to start going long. Um, and from here, it pretty much the rest of the day just made very steady, very linear climb, until it got to about the this level right here, which was your high from this big breakdown day. And it made a small pullback. This on its face is very bullish. This pretty much says that we're good to go and we're ready to make the next leg higher in the market. But the only thing is that we need to break this 394.17 level. So for now, our target to the upside is we are good to test this 394.20 level. And after that, we're good to test the SPY 400 level. So for now, we are good as long as we remain above this line right here, which was the area in which we were trading for about the past 3 weeks until we gave it up about for 2 days in a row. But this was actually a very strong candle, and all these fake outs and the fact that it actually went down almost to test the 50 EMA, and the fact that it survived that is actually very strong in its face. So this was a shakeout. People who bought here are sitting on a very good position. So for now, we're still long. We're still in an uptrend, and we're actually within range. But as soon as it breaks above this 394.20 range, we're, like I said, we're gonna run to the SPY 400. I did take two plays today. One of them was a decent call. The other one was not so much. The first play I took today, and you should never really do this, and the fact that I even got a reaction, was I felt like was kind of lucky. The first play I actually ended up taking was um, I actually took a short play here around 9:35. And the reason it was is because as soon as we broke this, I said, hey guys, our next target is going to be SPY 390.90 or 391.20, anywhere in between. So when we finally got to this line, um, you usually don't want to short in an uptrend. And in fact, it's very advised against. But what I ended up seeing was that the RSI was actually showing that it was overbought, and this is an indicator that's telling you that the market is getting kind of hot. And as you know, like the market likes to travel within within normal or within the normal limits, and these tell you whether the market has been getting bought out a lot or whether it's been getting sold out a lot, right? So I said I'm gonna take the play here, and what I'm gonna try and do is I'm gonna try and scalp it if anything, or it might even retrace back down to one of these lines. So what I did is I got in the calls at 43 cents, somewhere around, I said 9:35. It wasn't that line. It was this one right here. Um, and I ended up at 43 cents. What I did is I put about a 10 cent, I put about a 20% trailing stop. So what ended up happening is it was at 43 cents. I think at its peak right here, it was about 38 cents. And it actually started going good. It went all the way here where it was worth 50 cents. So it was actually up about 7 cents per contract. And then on this quick pop up, the price actually ended up going down to about 40 cents, 42 cents. Yeah, because the price went up to 52 cents, went down to 42 cents, and that was where my trailing stop actually triggered, and actually got stopped out. So it's all right. I only ended up losing about 2 cents per contract. Um, but if I would have put a much wider stop, I could have made money on the next leg down, because here it went all the way down to, like, I believe around 62, 63 cents. And if I would have, put that 20%, I could have gone stopped out somewhere around 448, 50, taking that quick scalp. But why did I take this play? Is because the way the market has been the last couple of days is that it always makes a move up, and then you always see a large retracement through the day. So I didn't know whether today it was going to continue going up or whether it's going to stay. So I was willing to risk 10 cents per contract, knowing that it could possibly, give me 50%, double my returns, maybe even triple. And the fact that, at here, I could here from here to here was about 20 cents, and on a 43-cent contract, that's actually about a 50, almost a 50% return, for 20 minutes. So I set my trailing stop. I was wrong. It's all right. I lost a little bit, but I was planning to either win big or win small. But unfortunately, because of this, quick, second test right here, I actually ended up getting stopped out. But it's all right. Like I said, it was only about 2 cents per contract. I only had about 10 contracts, so I ended up losing about $20. And it was actually a fake out, because it came back, and the rest of the day it just roared. And again, look, you start reaching this very overbought territory. So as it didn't it didn't the on the first run, it didn't get to come test this. And so this made the high of the day, right? On the second try, this was resistance. And on the third try, this again was resistance. And this right here was made because we were getting into very overbought territory. And the rest of the day we can just chopped around until we ended up closing very strong. And even after hours, we're still climbing. So that in itself is very bullish action. It's very, very strong for the market. It means we're good. We're back to keep moving up. And that was my first play. So it was actually a contrarian play, and that's, like I said, it's not what I recommend, but it was a small risk for a small reward or possibly a large reward. The next stock I'm going to look at is the second one that I bought, and this is IPOE. And this stock, I actually didn't trade in the morning because, again, the market was dumpy. But when I saw the daily chart and I saw that it came into the 20 moving average, into the 50 moving average at 1923, I ended up placing an order to buy at 1922. And I ended up buying this at the end of the day. However, usually if it comes and it runs away and it comes back a second time, you don't want to take that. Why? Because it said that the first bounce didn't work. Because from here, we should have seen, a rocket ride from here up. We should have seen price go far away from this range, right? However, it came down a second time, and I ended up buying in here, so around 1922. But why did I take this? I took this trade because even though it came back down a second time, the S&P 500 was dumping here. So I wasn't sure whether I wanted to take it in a falling market. But the S&P 500 was so strong that I said, you know what, I'm willing to take it here a second time, knowing that the S&P 500 has fixed itself, and the fact that we're going to start seeing, the next leg of the bullish market. So this should reverse. And we actually ended up seeing, an excel, as soon as it broke this 1921 price, you pretty much saw a quick, acceleration to the downside. It caught a bottom, but then you also saw a very strong bounce into the close. And the fact that it went from about 19 to about 1940 in the matter of like 5 minutes, that's a very good sign that the bottom was put in, because a bottom was put in when it travels far away from the price very quickly. And in fact, after hours, it actually made, very, very big moves It hit a top of 2166, and right now it's about 2035. So, we're good. We're far away from this price now. I'm going to go ahead and let this stock run. I'm going to probably hold on to this for the intermediate to long term, just because I actually do believe in the long term success of this company. IPOE is going to merge with SoFi, and it is expected to be one of those disruptors in its field. So that's pretty much it for today. For tomorrow, I didn't give you guys a level, but for tomorrow, the numbers we'll be looking at is we need to get above this 393.10 level. You can see that this level actually got tested after hours, and then it got rejected, and so right now it's just trading, within this channel. We need to break above 393.10. And then we need to get above 394.20, which was the previous high of day. And then after that, it's pretty much smooth. Well, it might not be smooth sailing to SPY 400, but that's going to be our next target. That's the target that everybody else is looking at. If you have any questions, like I said, just drop a comment, shoot me a message, or whatever, and then I'll see you guys in the next video.